welcome to this week's episode of Tambarara. Of course, I'm Tinashe and I'm joined with by a very familiar face. Can you tell you?
Good, Tinashe. How are you?
No, I'm doing great. So of course we have quite a few things to run through today, especially considering how active the government has been with their policies and a lot of announcements that have come out in the last few weeks. So I think we can start with the reversal of the lending suspension. Do you want to just touch on that?
Yeah, so I think we all expected that because a lot of corporations, especially manufacturers, especially hip-hop, they were complaining that they couldn't pay sugar millers because they usually use overdraft facilities and short-term loan facilities to pay them. It was now affecting production. Basically everyone across the value chain was seriously affected, and I'm glad that they reversed it. But what does this mean for policy inconsistencies going forward? How can we have faith, in terms of investing? From the investor perspective, where do you put your money? Are you even, we've seen a bloodbath in the market recently as well. I don't know what you think of this policy inconsistency.
Yeah, I think you bring up a good point about policy inconsistency, especially when you look at entire value chains and how investors look at this. It makes planning hard for both, anyone in the industry, be it a manufacturer, be it a bank that does the lending. Especially when you look at banks, a lot of banks are backed by foreign investors. How then do you, as the CEO or the MD of a Zimbabwe bank, go to international investors and tell them, as a bank, we can't lend anymore? What does that really mean for the institution? What exactly, are you doing as a bank? And I mean, as much as banks do get revenue from things like non-interest income, I mean, lending is still a big part of the functionality of the bank's operations. So in that regard, I think it just makes the whole industry quite confused and no one really knows what to plan for anymore.
Yeah, we are happy about the reversal, but we don't know, what other extreme measures could be taken. It could happen again. The rate is going to continue running in the interim. And yeah, we're probably going to see a lot of more, stricter measures coming in.
Yeah, exactly. And again, just speaking of measures coming in, just this week we saw, measures on the importation of basic goods and other incentives that the government's trying to do just to sort of, ease the economy coming out of this COVID era. One of the things they did was to try to incentivize early delivery of grain to the GMB by offering a 30%, USD payment to farmers. Again, I know we were talking about this earlier this week, so do you just want to cover that as well?
Yeah, I think the effect of that 30%, it's a mixed one because a lot of the farmers engage in side marketing already. So they could be getting a lot of USD already from those sales. So why would they come to GMB just to get 30%? But those that don't receive USD through side marketing, I think they will benefit a lot from the 30% retention. But the worry is that it's going to put pressure on forex reserves. We've already seen numerous auction backlogs and companies failing to get USD out on the auction. So I don't know how this will affect that the pressure on FX reserves. And it's probably going to put more pressure on the rate as well.
Yeah, exactly. I think just speaking of the rate, I know that the US dollar payment will be calculated at the sort of prevailing willing buy, willing seller rate. And of course, none of these rates, none of our three rates in the country right now are very consistent. A lot of volatility. So again, a lot is still to be seen in terms of how this all plays out.
Yeah, I think at least we've now seen a sort of narrowing in the gap between the willing buy, willing seller rate and the auction rate. But if you look at the black market rate, we're still seeing 100% premium. So yeah, the gap isn't really closing in that regard.
Yeah, exactly. And just a bit of a side question, please. Where do you see the rate being, say, by the middle of the year?
I think our country is mainly driven not purely by fundamentals, but by speculation. So in a system whereby there's political inconsistencies and where we have policies being changed from week to week, especially in this type of environment, we're going to see more speculative, action in the black market. And now with this cheap importation of basic goods, we're basically now formalizing the informal sector. And once you have that, you're going to have a lot of speculation in terms of currencies. So we're just going to see the rate running. I think it could hit even 600, 700 by July.
Yeah, I think you did touch on a good point there in regards to the informal sector versus the formal sector, especially with the suspension of tariffs on basic commodities. And for all of years, I'm sure you guys have seen that the government is trying to incentivize access to basic goods. So you have things like your cooking oils, your flours, your maize, where import duties are being suspended, and that will of course open up the informal sector to sort of supply those, and that gives competition to your formal players like that. So, please, how do you see what are the implications of this?
Yeah, so I think generally we're an importing nation. So for most retailers, they already import. Pick and Pay especially, they import from South Africa. So I actually think they will benefit in terms of their costs because now they don't have to pay the import duties, on those imports. But in terms of price competition, a lot of them, especially they tap into the lower income segment. they compete with the informal sector. But now the informal sector has that legal avenue to now bring in cheaper goods and sell them to consumers who'd rather go there than go to OKSM. So I think they're going to suffer the most in terms of the price depression of their margins. And our manufacturing sector, which recovered in terms of capacity utilization, I think last year they reached 61%, which is the highest in almost a decade. We're going to see a reversal of that because of this, because people are not going to, buy uncompetitive goods here, because our cost base is really high. They import a lot of the raw materials. The cost base is USD. They sell it on RTGS. It's just not competitive for them. So I think we'll see capacity utilization going down, and manufacturing sector will be injured. But it'll be good for disposable incomes. You will have more money to spend on, other things. So your Deltas, I'm sure International will be happy. Delta will probably see an uptick in sales as well as AFTAs.
Right. Yeah, no, but I feel like you have to look at the sort of like adverse incentives that you don't expect, especially further down the line. As much as say more disposable incomes, I think we have to consider the cost containment measures that's going to have to happen at companies like Natfoods, EOKs. This can include having to, downsize their stock, which can put people out of jobs. Your unemployment rate could then rise, which then has a downward pressure on, on your disposable incomes. It's one of those like kind of waiting until we see what really plays out stronger, be it the increased disposable incomes from these basic goods, or the effects of unemployment on the market. And again, we've also seen just after these measures get announced, the market has been quite volatile, especially following the announcement of these measures. And again, even on the Zimbabwe Stock Exchange, we're seeing companies that aren't directly affected by these measures, having completely turned around and having downturns following, the bull run in the last month. If you look at like the TMT, telecommunications, media, and tech index, it's down about 30% over the last week. And you ask yourself, how exactly are companies like Econet and EcoCash Holdings directly affected by these measures? I think there's just clearly a panic in the market because people, are very uncertain about what's going to happen. What do you think, Vinicius?
Yeah, I think companies like Econet and EcoCash, I think EcoCash holds about 80% of the mobile business market. Econet dominates the payments, the mobile revenue system. I think they get probably 90% of market share because you can't really compare them to TAL1 and Net1. So, yeah, we're going to keep on transacting now because I'm sure as soon as all of us receive our RTGS salaries, we're trying to find ways to transact and get USD. So the EcoCash is going to keep getting money off the 2%. And Econet, just the mobile penetration is so high in the economy as well. So we had a good agricultural season last year, so that may also increase, the uptake of use of cell phones. And yeah, so I think, definitely those type of companies, we consider them blue chips. And it's what we actually advise investors to get into at this moment because you preserve your value in blue chips.
Yeah, no, definitely. Yeah. So I think there's a lot to learn. There's a lot to kind of see as we go forward. And again, a lot more, I'm sure there'll be more measures put in and we'll see how this leads up as we head, especially into election season going next year. I think that's about it for this week's episode of Tamara. Unless, Kenny, if you have anything else to add?
Yeah, I think just to advise our investors, of course, invest with Morgan & Co. We'll advise you accordingly. I think right now, as we've said earlier in the conversation, that we'll mainly be advising people to invest in blue chips. And we still believe the financial services sector is quite undervalued. So invest in the multi-sector ETF, which is an ETF which basically follows the financial services sector equities. And yeah, we really advise investors to have a mix of that as well as individual blue chips.
Thank you for the recommendation, Kenny, and thank you guys for viewing. Make sure you catch us next week. Make sure to like, share, comment, subscribe.